Hey, Doc, Dr. Holly here, your Chiro Profit First coach. Before and after Profit First. We're going to get to this really quickly today. I've given a similar example before, so I just wanted to circle back on it because this methodology really is very simple when you break it down into the visuals. I love visuals. I love seeing numbers, all laid out and seeing the intention behind them. Okay, so I want you to think about what your business bank account looks like right now. Do you have one? Do you have two? Did you get the standard business checking and the business savings? Does it look anything like this? Okay, these are taken from real client examples, but of course been scrubbed for confidentiality. So just taking an example of what an office, a doctor might come to me to consult on, is Profit First right for them? And, how do we get their money numbers, management of cash flow in their business to be more simplified. Okay, so I love using the Profit First methodology. I've used it for years. I've used it in multiple business models. I have consulted on a good amount of practices in the chiropractic profession. I've also consulted on other businesses that are outside of our profession or our industry. Okay, so this methodology can work for you for the age and stage that your business is in, and it's completely customizable. Okay, but the basis is the fact that we have 5 foundational bank accounts plus 2 vault accounts. And I'll get to those in a second as far as when you actually determine when you're opening those. So we go from this view over here. Think about it. You go log in to your business bank account. You are checking and checking to see what your number is, right, in that main checking account. Okay. You may have many different thought processes that are going on as far as what makes that number good or bad, or make you tighten up a little bit, or make you want to go spend some money, whatever. Okay, we can have lots of different emotions based on whatever number presents itself to us. Okay, but you may be thinking, yeah, okay, $23,000, that's great, but I know that there's a constant hamster wheel of everybody else that's coming for that money, right? You have to think about how you're making payroll for the next payroll cycle. You have to think about all the different bills that you have throughout the month, what day that they are due on, when your insurance reimbursement checks are coming in, or when your deposits are coming in, and managing that whole process of just, it's a constant ticker, right? I've been there. I've run businesses before. I know it feels like it's never ending. Okay. You have your owner's pay. At some point, you got to pay yourself out of this. And for, most of us, especially in the early years, you will probably choose to pay everybody else before you pay yourself. Okay. Or just take what the absolute necessity is, baseline for you to maintain a household. Okay. You got to think about taxes too. Hey, big surprise. Whoops. Didn't save for taxes or didn't make quarterly payments, or haven't reached that point in your business where you would send them, the IRS, their money throughout the year instead of just one day of the year. So that number is not really telling you a whole lot intuitively, because your mind goes one of two ways. It thinks, hey, that $23,000 is mine to spend, or that $23,000 has nothing to do with me and it's everybody else's. Okay. We can be on either ends of the spectrum. We've got this $5,000 that's sitting over to savings, but we don't really know what we're using it for, or why it's there, or how we grow it, or, when we tap into it, etc. Okay. So Profit First model introduces 5 base bank accounts. Okay. You're seeing 4 here because number 5 is just your incoming account. So the first thing we do is that we separate your incoming account from your outgoing accounts. Okay. And then we make new accounts that are savings accounts for your profit, for your owner's pay, and for your tax. Okay. So based on percentages, that again comes from your historical spending and comes from the methodology, and we marry those two together with our assessment. We will make your bank balance accounting essentially more intuitive. Okay, so that when you go to log in, you'd have an account here at the top that would say, here's my new incoming amount. Okay, so since whenever the last time that you looked, hopefully it has more money in it. Okay, so it's intuitive to know, hey, I know that I was supposed to get such and such payers, ACH transaction deposits, EFT deposits, whatever, into my bank account on the 5th of every month, and you're looking at it on the 7th, and you're like, hey, something looks wrong. Okay, it just gives you that little nudge of, hey, it's positive reinforcing, because that one account should always have a little bit more money in it than the last time you looked at it. Okay, your profit, again, when we name things, we got to keep them, right? So we name them and they have a function. We know very clearly what part of the pie is ours. Okay, so owner's pay, We're setting aside money for, say, for those taxes, and then we have our operating expenses, okay? This is what your overhead is. This is where you get to spend your money, okay? And we fund these accounts on a regular basis so that we keep the cash flow moving, okay? But look how more intuitive this is. We don't see a total, okay? That's also what's missing. Although your total under here is just under $30,000, we don't see a total over here because we don't want to psychologically think we got $30,000 to blow, right? So over here, we break these numbers down, and hey, this might be a big pay raise for you. This might seem like a lot of tax money. That your profit may be a whole new word for you, okay? And then psychologically, again, our spending typically grows to the amount we let it, okay? So if we are constantly looking at this big high number over here, are we making spending decisions on this number rather than a more conservative number that we need to stay more within the reins, okay? So our motto in Profit First is, if in doubt, open an account. If you know you want to buy a big fancy table, go to the bank and open up a savings account that says fancy table or equipment or reinvestment or whatever. And we can set a dollar amount or a percentage amount that is always funding that account so you're actually reaching your goals. Okay, you're not just crossing your fingers and saying, well, one day I'll be able to do that. No, we put intention behind our dollars, okay, from day in, from dollar one. All right, I told you I was going to tell you a little bit more about the plus two. A little bit out of time for right now, but the plus two are your vault accounts. So we do want to get to a point where, hey, that profit and that tax, we don't want them staring you back in the face, tempting you to go spend them because the timeline is a little offset for that, right? You're saving for taxes, you might be paying in on a quarterly basis, you might be paying in on an annual basis. So the number's going to get a little high, okay? Especially if you make your business more profitable, okay? So we will want to open up what are called vault accounts. We may open an emergency fund. We want to get that off the main screen, but still have it to access if we need it in an emergency, okay? So this is before and after Profit First. I'm Dr. Holly, your certified Profit First professional. I challenge you, go over to my bit.ly link, bit.ly/Chiro numbers to get my resources, or go to chironumbers.com to check out some of the blogs and the video trainings and the courses and the coaching packages that I have available for implementation of Profit First, and exclusively work with chiropractors just like you.